All right, good morning. It's about time to get going. Looking around my desk, looking for glasses. Oy vey, constantly looking for my glasses, and I never seem to have glasses. I have dollar store readers, but all my prescription ones, I don't know where they are. A man of a certain age, huh? I used to be the youngest guy in the room. Marina hates music. Yeah. Yeah, it's sort of wake you up type music. Yeah. Oh my God. So my watches keep getting bigger because I can't see any of my watches. So the watches get bigger and bigger and bigger. I went from this Cartier. I can't see it anymore. So now I got this big giant Bell and Ross. And at least I could see it. I was so happy. I was so appreciative. I'm like, look at that. I can see the time. But they're so big. Anyways. All right. So I guess let's get on with it. So welcome to Forex.Today, the YouTube community of, almost 20,000. Right? Almost 20,000 foreign exchange traders, which is pretty good because the foreign exchange community is quite small and is quite tight. So to have 20,000, that's just really amazing. That's really amazing. So thank you for being a subscriber, and thank you for, taking every single day, a balance of lightheartedness but seriousness at the same time. This is our profession. I'm not here to get you in the rah-rah spirit of making a bunch of trades, getting rich quick. That's not what I'm here for. I'm not trying to sell you my $3,000 course. I've been doing YouTube since YouTube was a tiny little startup that no one ever heard of. Imagine that. There was a time when if you went to YouTube and you typed in Forex, I was something like the first, page. My videos were something like the first 12 pages of results. Now you type in Forex and it's idiot after idiot after idiot after idiot. Scam artists get rich quick, scalp and make $1 billion. Look at me, I got my yellow Lamborghini, and I'm like, oh my God. But that's what YouTube wants, I guess. Maybe that's sexy. I'm a business man. I mean, this is a business. Forex is a business. It's a really good business. Before I was a Forex trader, I was a venture capitalist. So it was my job to look at business opportunities and invest or not invest. And myself and my team made hundreds of investments. So I've read thousands of business plans. I've looked at probably thousands of patents and all that kind of stuff. This is a really good business. But I came in to Forex as a fairly well-known Silicon Valley entrepreneur, and Forex was, to me, just the greatest business I'd ever seen. Think about that. So I look at Forex as a business, okay? And there's nothing about being a business owner that gets rich quick. There's no get rich quick in the real world, okay? So most millionaires own businesses, and most of those business owners have worked their ass off, blood, sweat, and tears for years. And I look at Forex the same. So right now, you might see some of the markets have been volatile, up and down, right? Up 100 pips, down 100 pips, up and down. Well, if you're going to look at how to produce a good Sharpe ratio, which is risk-adjusted performance, okay? How do you get a good Sharpe ratio in volatile markets? Okay. Trade with better trades. And if you recognize, so better trades, right? which means patience and discipline, not just to buy something because it's low if you're a bull, but a low off of support, then with a higher high, then with a higher low. And then if you lose money, it's only a little because you're buying your support and it didn't work out and you had a real setup, right? Or lower your lot size while you wait for the better setups to set up. But there's no sense of making 5% and then giving back 4%. Because that's volatility and you're just getting crushed in the market. So anyways, that's what you ultimately want, is that patience and discipline. And you got to look at it like a business in the sense that your job is to look for opportunities with the least amount of risk, with the best return on investment possible, and then manage the risk. It's not necessarily to trade more, trade a lot. It's not necessarily make a bunch of trades, get rich quick. It's not like make one big bet and hope you hit a home run. So anyways, so this is where I come from. I look at what we do as a business and that you're providing a service either to yourself, because like when you study real estate, you can say the home you own is just sort of an asset, but it's actually providing you a service and you actually pay it because you got to pay your mortgage, but the bank is providing a service by lending you money. But you got to put a roof on, you got to change the windows, you got to mow the lawn. I mean, you're feeding your house, you're paying it. It's providing you a service of shelter and investment. So anyways, Forex should be looked at not get rich quick, but this is a long-term service you either providing yourself or one day providing to clients. And, you need to provide, some sort of alpha that's in line with the beta. And the only way to outperform the market, which is the beta, is typically risk. That's why you want to look at a Sharpe ratio. And the Sharpe ratio says if the markets are volatile, your trading should not be, because that's your alpha. Your alpha isn't out to outsmart the market, is to have smart risk management. And you'll find, like any business, what you want is steady profits. You don't need ginormous profits. You need steady profits over long periods of time. And that's a business. So anyways, I start out today bringing this to you. This is my point of view, and therefore you're going to, as I teach my point of view, you need to understand where I'm coming from. So today probably won't be sexy. I probably won't get you into a bunch of hot trades with my new awesome strategy and we're gonna crush it today. Let's make a whole bunch of money. No, we're going to look at the market. We're going to find opportunities. And if we take them, we're going to manage the risk very intelligently. And at the end of the day, at the end of the week, at the end of the month, at the end of the year, the math will work out. The math will work out. So anyways, so thank you for being here. And thank you for your inquisitive questions and very often informative questions. Those are the best questions where you uncover something, right? I have to uncover something new to share with you. Okay. Kiwi yen trade? I don't think I'm in a Kiwi yen trade. So anyway, it's the beginning of a new month. So welcome to November, and we'll go through the calendar as well. So let me do the disclaimer. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term and never risk money you cannot afford to lose. I'd also like to thank Traders Way for being part of our community. Look, we're traders. You're going to need a broker to execute your trades into the interbanking system. You probably don't want a broker that does not enter your trades in the interbanking system, because that means they're trading against you. Well, that doesn't sound great. But if you guys remember when the Swiss National Bank blew up some major brokers, it's because they must have been holding the other side of a bunch of bad trades, and they got burned. So anyways, Trader's Way was not affected. And that was the day that they earned my loyalty and respect, because it proved to me, not through a press release, but through their actions, that they don't trade against their clients. And I'm like, love it. So anyways, tradersway.com, open up a demo and check it out. I was checking out a major broker in the UK. Just knew someone that was using them, and so we were talking about it. So I was checking out the platform, and I went through their spreads, and almost every, I think I only found one, high yielding currency. I went through every one, and they had a few more that currency pairs that Trader's Way has, a little more exotic and stuff. So I was like, oh, really interesting. I wonder what these yields are. So I went through, and you can do that, by the way. You can go to, you open this up, and you click on anything. So, right, so you can pick something. Where's a good one, like ZAR? All right, like this one. You highlight it, and then you go to specification, and it shows you the swap. So it means if you're buying South African Rand, you're earning a huge swap. That's huge, guys, in points, right? Pips, basically. Huge. And then if you look at long, well, if you're selling South African Rand, you're going to lose on that. That's the interest of your borrowing cost, right? Or the interest of your yield that you're earning from the investment minus your borrowing costs, right? So if you're borrowing dollars to invest into South Africa is going to pay you a high yield, right? And so anyways, that's positive. And if you're borrowing South African Rand and paying like 6% for it, like obviously to invest in the United States dollar, that wouldn't be a good, right? So anyways, you want to be short. And if you earn short, the interest that you're earning on your investment's huge, huge, huge. So I went through this other major broker out of the UK. You know, honestly, true story. I'm doing this last night. Went through, looked at all their high yields, negative yield on both sides of the trade. So if you were investing into South Africa, you were losing money, which means they were collecting the yield earned because they put it in the interbanking system. So now they're going to earn the yield, and it's huge on the South African Rand, but I went through a bunch of others too. And it was all the same, negative yield no matter what you were doing. So they were collecting the yield that you're entitled to earn, and on top of that, charging you money for it. So they were double dipping against you. And I'm like, oh my God, this is a major UK broker that this guy was using. I'm like, oh, that's ugly. Can you imagine? It was like you're supposed to be earning 5% and they were charging you 5%. So they were collecting your 5%, plus they were taking the other 5% you should have been earning. So now they're clearing 10%. Like, oh. So if you think that's not cool, then try tradersway.com, because you can see this is massive, huge swap, which seems to me you're earning the full swap. So wowzer, wow. I'm reminded that a lot of traders are being blindsided, and their brokers are double dipping against them. Not the good, not the good. Okay? That's what they say in Holland, right? That the cheese is good, but it's not the good. Okay? Anyways. Let's change this back out of the minute. Let's go to the hourly. Hourly. And hourly. Okay. Chronograph is like, interesting. Wow, right? Yeah. Yeah. Anyways, cool. You know, I've been trading so much recently. My my left hip is seizing up, and I can tell it's my chair. It's a very, very expensive chair, but I think I've worn out this chair. Oh my God, it's hard now. I'm going to have to do some yoga or something crazy. Whew, can you imagine that? Me doing yoga every day? All right, USD dollar strength but coming down. Yen was strong but now coming down. Notice that if you think about it, at the end of the month, there's lots of profit taking. And then at the beginning of a month, there's a lot of resumption of trend. And so up very often to me means people getting out of yens. And then down means people getting back into yens. And what do you mean by getting back in? Well, it's a funding currency. So you're borrowing and then investing it somewhere like Australia. Okay. Hervé says no. But so I was in New York in late August, right before the big move, I think second week of August. So I've lost 17 pounds since my visit to New York. I think it was the second week of August. So November 1st, was that a pound a week? That's legit. All right. So, so as you guys already know, I'm bearish on Japanese yen and I'm bearish on US dollar. Oh, my hip, crazy. All right. So let's go through it. I can't quite see. There we go. We'll go through this. And you know what? No. Before we do that, I want to do the calendar. So hang on. Okay, let's go through the week, look for opportunities and threats. This is a big week. My paleo, no. Okay, no. All right. But you can be paleo. That's fine. All right. Okay. ISM manufacturing, important, but not the biggest thing in the world because 70% of the United States is consumption, but we're a service industry is what I'm trying to say. Okay. So that's kind of, okay. That's not a big deal today. Okay. That's not a big deal today. We have Bank of Japan meeting minutes. That's interesting. Yeah. So that would be something to read or to research. Okay. Then what do you think? The RBA interest rate decision? Yes. Very important. So that is going to impact trading in Asia today. Okay, this comes out and then several hours later this comes out. But obviously the statement is even more important than the decision. But what's interesting now, and we talked about this, I guess, 6 weeks ago, when the Fed told us that they're changing policy, and that policy change is tapering. Tapering is a change in policy. Not tapering. Now we're probably going to find out this week they will start the taper. And we know by June the taper will be done. Okay? So that is a new policy. So once it's announced, it allows all the other central banks to do what they need to do now. because the reserve currency is so important, and the Fed manages that a lot of the central banks can't or don't want to move before the Fed because of adverse effects of doing so. So now, and those adverse effects are indirect. It's not like the Fed will punish them or something. It's just the way it works. So now that the Fed said, hey, everybody, hi, we're going to taper, wink, wink, nudge, right? Go ahead and front run us. Suddenly you see massive changes in policy or sentiment out of other central banks. So RBA could be one of those that says, okay, maybe there's a change coming. So this will be very interesting. It'll be the first RBA meeting since the Fed announced the taper. So anyways, that could be a good one, and there could be a good surprise. Okay. Okay. All right. Moving on. Manufacturing data out of Germany. Yeah. Yeah. That's important. Okay. Germany is not only the largest economy in the Eurozone, it's one of the world's largest exporters. Okay. Cool. RBNZ, Financial Stability Report. Yep. That's a good one. Kiwi Jobs Report. Yep. That's a good one. Okay. So Tuesday, which is really, Monday night and then throughout Tuesday and then Tuesday night, massively important for Asian currencies. Huge. Wednesday, okay, you got Eurozone, right? Jobs. But that's going to be overshadowed by a couple of things. One, another dumb prediction by ADP. And this little thing we call the Fed interest rate decision and monetary policy statement and FOMC press conference. That's the singularity in the price time continuum. Even though all this other stuff's important, and it is important, and it will move the market, even more important than all the important stuff is, this giant black hole in the price time continuum. Huge, especially with the taper. Now, I think the biggest threat is they don't taper because they said maybe November, as soon as November, right? I think the words were as soon as November. Wouldn't it be just redonkulous if they didn't do it? And they're like, nah, we want to wait to December. Oh, that would just blindside a lot of money that's been put into the market. So anyways, that would be the real risk, but probably not, but that's what makes it risky. Maybe, baby. OPEC. Okay. I want to go to an OPEC meeting. I've been thinking about it a while, but I don't want to go to Vienna in the winter, so so maybe one summer we can go, but then that might be a terrible time, to get every 5-star hotel is probably booked to the max, huh? One time, I used to stay at the Waldorf Astoria all the time when I went to New York. It was a second home for quite some time. I mean, literally, it was a second home. It was really cool. And I stayed in the towers all the time. Anyways, I checked in one time, and there's a private entrance. I'm not talking about the main Waldorf Astoria, but you go in the side entrance, and there's a private entrance, and it used to be apartments for movie stars and musicians and stuff. And now it's just a high-end part of the hotel. Anyway, so I checked in, and then he's like, oh, I'm sorry, sir, but your room is not available, so we're going to transfer you to the main hotel, and we'll give you a nice suite and everything. And I'm like, wait, what? I booked this a while ago. Like, it's my room. Like, what do you mean it's not available? And it turns out, like, the Prince of Dubai, which is funny because there's 100 of them. There's 1,000. And, everyone in Dubai either is a prince or knows a prince. Anyways, but this guy was a baller though, because the hotel guy, I knew him because I'd been there before, and so he's like, I'm really sorry, man, but he's rented 2 entire floors and he's been here for 3 weeks and he's decided to stay another couple of weeks. So he's just, they have 2 entire floors. And I'm like, all right, I get it, man. I get it. Because, my 2-night stay. So I think of Vienna that way, like, man, all these 5-star hotels in Vienna, with OPEC there, entire floors are going to people, right? For their entourage and stuff like that. So I'm like, maybe that'd be a terrible time to visit Vienna for it's an OPEC meeting. But I think it'd be cool. So maybe I'll Airbnb it or sleep on a bench in the train station or something like that. But what do you guys think? Would you want to hang out in Vienna if it's a nice, beautiful day? Nice, warm day in Vienna? Write it off in your taxes because you're like, I don't want to go to Vienna. It's just there's an OPEC meeting there. Right? See, it's a tax write-off. Yeah, it's a business trip. I don't want to go to Vienna in the spring. Terrible. But business is business. Right? Cisco's like, yeah. Okay, cool. All right. Then check this out. Thursday, because it can't get any better, right? RBA, Fed, right? And then what? You're kidding me. Redonkulous. BOE. Oh boy. Oh boy. BOE interest rate decision. What a week. Blessed. RBA monetary policy statement back to the Aussie. Aussie's going to roar. Okay. Now, I bought Aussie last week. Wink, wink, nudge, nudge. So it'd be great to get paid. Since I bought it last week, I'd love to get paid this week. So come on, Aussie. Get up there. But you can see the flow, huh? Aussie, Aussie, Aussie. Oi, oi, oi. Okay, so that's great. And then what? U.S. jobs report, a.k.a. NFP. Shut the back door. You're kidding me. It just never stops. It's a huge week. Massive, crazy, important week. But it's an important week. If none of this happened, I would say it's an important week because I'm trying to get my NOV on. But oh my gosh, that is redonkulous, right? OPEC meetings going on. You know what OPEC's saying, right? Screw you. Oil used to be 0. We don't care that it's 85. We need to make up some lost ground. Remember that when there was too much supply and then we went into a trade war between oil countries and oil went free and then we got hit by COVID, which just crushed demand and all this kind of stuff. And here we are. Demand is high. Prices are up. Supply's low. Look, oil companies haven't even been exploring for new wells in years. Do you understand how difficult it is to go find some more oil or go drill some more oil or then build new pipelines to move oil? And you can't just snap your fingers and say, oh, you need more oil? Okay. And you're like, well, what about Saudi Arabia? Okay. Well, they've been trying to help. They're basically been at maximum capacity anyway. So you can't just say to Saudi Arabia, like, hey, Saudis, why don't you lower oil prices by increasing output? They're like, it's max. It's max. There's nothing more we can do. We're sucking it out of the ground as fast as we possibly can. Oh, well, what about America? Frackers. When oil was free, many of them went out of business. They went out of debt and all that kind of stuff. And by the way, turning on a well is not like flipping a switch. Okay? Now, many went out of business, but many other companies and oil frackers in the United States have refinanced their debt with the lower levels of interest rates and all that kind of stuff. So the ones that survive are probably better off. But that also means who survived? The aggressive ones or the conservative ones? The conservative ones. So now they're not going to overproduce. They're not going to over leverage, all that kind of stuff. So don't expect suddenly more supply than there is demand. Demand is growing and there's short supply. So anyways, this OPEC meeting is really interesting because we're going to find out that there's nothing much Saudi Arabia can do. And of course, who's going to benefit most? And all the Europeans know this, the Russians. And the Russians are going to benefit the most. Which, sort of diplomatically sucks because the rest of the world probably doesn't want that. Rich, powerful, aggressive Russia. So whatever. It's not for me to say if it's good or bad. But I believe Putin is by far the richest man in the world. And you're like, well, what about Bezos? What about Elon Musk? Well, I know Elon Musk has a flamethrower, but Putin has 100,000 tanks and 30,000 bombers and 20,000 nuclear missiles. Yeah, Putin's the man. Okay. All right, cool. So anyways, that's that. Big, massive week. So keep in mind, what are the big movers here? Probably Aussie, and therefore maybe Kiwi. Okay, so on and so forth. Yeah. Wow. Anybody else? Well, what? There's a little bit of yen in there. There's a little bit of dollar play in there. Yeah. Okay. OPEC should move Kitty Cat and Noki. Okay. So hopefully that's helped you frame everything. The thing I'm watching right now is Aussie yen. It's somewhat of my canary in the coal mine. What I want to see is the up, and the up. I fully understand. As you can see, even as far back as Wednesday of last week, we were talking about how this is going to be the issue. I know the price, but I don't know the time. Okay? But I know 86, which is the price, is going to be an issue. And we've gotten there, you can almost say Thursday or Friday, sorry, right? We hit it Friday. We hit it Sunday. We're hitting it now on Monday. Okay. Is it going to break or not? Well, I don't know, but I need it to. I want it to. Okay. Because if we reverse here for a while, I have to stop. I'm not ready to stop and reverse. If it was not November 1st, but January 1st, for example, I might, maybe not on yen, but it's just not a stop and reverse for me, but it's definitely a stop. Okay. So, and if this comes down, none of the other yen pairs are going to go up, in my opinion. So it's important. So anyways, I'm watching. We're riding a 4-hour 21. It doesn't look good, but it's fine. Okay. Okay. How about Kiwi? Kiwi's trying. Okay. It opened out of position. Okay. This is our OOP. Sorry. Oh, yeah, OOP. I've been doing OPP a lot lately. Other people's pips, maybe. Anyways. So 4-hour 21's important. Roll reversals are important. All that kind of stuff. Daily pivots are important. Okay, so you kind of have three things going on. Well, I guess it's two things, this and that. And I will make that a little more defined. And now it needs to get done. That's all. Now that's hopeful. So if this breaks to the upside, Aussie's got permission. If Aussie breaks it, then this has permission. And if these break, then everything else has permission for a higher high. So it's been a long time since we've had a legit higher high. And I'm in the business of looking for higher highs and then buying higher lows. Okay. So, hey, another good one. Another maybe, but look at these areas that we need to test. Okay, that one's trying this high, but then we got the next one. You see? So now what we're looking at is the retracement, the consolidation, okay, and hopefully a breakout over the coming days. Okay? Coolio. All right, I want to take a break from that. I don't know about you, but I stare at my charts for hours and 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 hours. So I'm always looking for something else besides that to do. I mean, you guys should already have your trade set up. So anyways, let's have some fun instead. Let's do some real work. Technical analysis. Come on. You should already know what you're doing. But anyways, when's the Fed going to raise interest rates? Okay. Nobody thinks interest rates are going up in November. Okay. So interest rates at the November meeting, right, 11/3, November 3rd, will remain 0.25. That's what it says. 100% of all market participants, not even one, right? Remember, this is derived, what we're looking at, just to set things up in case you don't know. This is set up, this data that we're looking at is not opinion. I mean, it's sort of opinion, but it's real, not some fake BS. This is what I think. This data that we're looking at is derived from negotiations between banks, like banker to banker, negotiating loans with each other. Now, if you're going to lend somebody money and you think during the period in which you're lending money, interest rates will change, then you need to price that in your model and then negotiate that and say, well, we're going to lend you some money, but the value of money is going to change over the period you owe it. So with this higher interest rate needs to be reflected in the pricing model so that we're rewarded for the current price of money, but also the future price of money, because if the price of money goes up and you just pay it back, then we're actually kind of losing on opportunity costs. So in that case, we won't lend you the money. And then the other bank says, no, we need your money. So we think that's fair. We also believe interest rates are going to go up. So we'll agree to that, right? Or if they don't, you still have to negotiate. But the thing is, it's smart money negotiating with smart money. You understand? It's not opinion in that case. It's a real negotiation over billions of dollars. And they're not making mistakes. It's smart money versus smart money. Okay, you understand? All right. So smart money versus smart money based on the pricing of their deals. You can reverse engineer the whole thing and say, oh, well, they're pricing in the value of, right, at 0.25%. Every single deal. Every deal. Okay? So therefore, not one banker negotiated a Fed funds rate higher than 0.25. So not one market participant thinks interest rates are going to go up on Wednesday. Well, what about May of next year? Whoa, what? That's different. Okay, 60% of the market thinks interest rates will be the same as they are now. 33% believe either at or by the May meeting, interest rates will be 0.5%. 0.50. So 33% of smart money are currently negotiating billions and billions and billions of dollars worth of deals as if by or at the May meeting, we will have interest rates at 0.5, right? 0.50. A rate hike by May, either on May or before May. And to check if it was March or January, just change the tab. But you can see now 1 out of 3 believe we will have a rate hike in the first half of next year. Ooh, this is nice. Now you sound smart, right? Right? Now you sound smart. You're like, well, I'm looking at the data here, smart money data, bankers negotiating with bankers, and 1 out of 3 believe interest rates are going to go up in the first half of next year. It's not your opinion. I hate that when people are like, what do you think about interest rates next year? I'm like, why ask me? Why don't we ask thousands of professional investors, financiers? And I'd rather say, well, I don't care about me. I don't have an opinion. I just do the research. And research shows that 1 out of 3 market participants believe the Fed's going to hike in the first half of next year. Now you're factual, not opinionated. Love it. Love it. And 6% believe there's going to be 2 hikes. 6% believe there's going to be 2 hikes in the first half. So you could say, well, these guys are maybe a little aggressive. And then there's one idiot that thinks we'll be at 1%. So he thinks, this one idiot thinks 3. But statistically, not even 0.5% believe that, right? So whatever. I'm more in this camp. Matrix says, give value, not opinions. Right. And that's what I try to do here every day. Okay. Cool. All right. How about the next meeting? The June meeting. Whoa. See, to me, the June meeting is way more important than the May meeting. And you're like, well, why? You need to understand the Fed. If you're having questions about all this, you're like, what's going on here? This is what? You need to learn fundamental analysis and monetary policy and central banking. There's an entire course at FX Bootcamp. Yep. Shameless plug. But if you don't know this, I honestly, as deep down as I can go, believe you need to know this stuff. Okay? You need to know this. Okay, let's go to the next one. Ready? The June meeting to me is way more important. 3, 2, 1. Beep. Oh! See the ginormous shift? Look at that. Okay, many. If Amanda, Tuesday, Friday, Saturday. Michael, I know English. Monday, Tuesday, Friday, Saturday. I've been watching Godfather. I wait for it. I'm like, wait for it. She's driving. She wants to drive the car. I'm like, oh, this is so good. She's going to say it. Anyways, here we go. Many market participants believe the June Fed meeting, the Fed will hike. Only 30% believe not. Less than that there won't be. Okay? Very significant. So, the June Fed meeting, if you add this up, 70% of the market believes the interest rates will go up by the June Fed meeting, either at the Fed meeting or before the Fed meeting. Shiba Inu. What's up, Shiba? Yeah. Anyway, so huge, right? Remember, this is not opinion. This is not opinion. This is being negotiated right now. Big money deals, smart money versus smart money. And they're actually, again, you can price it out based on the price. See, that's the mid price. The average price, for example. And you can extrapolate it. It's only math. And you can say, oh, well, this many percentage of the deals, because you look at the price, have priced in that by June, there will be, interest rates will be 0.5%. And you just do reverse engineer the math and you're like, that's how they got to their price. Isn't that neat? Okay. Super important because now you're thinking like smart money. 70.2% chance of a hike. Okay, you want to go forward even further? How about by the end of the year of 2022? What will interest rates be? Somebody might say, well, what do you think about interest rates next year in the United States? You're like, well, I don't really know, but my research shows there's a 70% chance of a hike by the June Fed meeting. But by the end of December, my research shows that interest rates will be somewhere between 0.5%, okay, and 1%. That's huge, right? But you're like, 1% is really not likely. Okay, so you could say now almost 60% chance that we'll be at 0.75. Okay, you could say 70% chance by the end of the year, 70%, right? The market has priced in 70% chance of interest rates being somewhere between 0.5 and 0.75% interest rates. Oh my God. Oh my God. Now you sound smart. Well, you are smart. You've done your research. Isn't that great? Now you're like, well, which one is it? Probably 0.5%. There's probably only going to be one rate hike next year, if at all. But it could be two. And they're like, well, what's the likelihood? There's twice as much chance that we're at 0.5. Half as much chance that we're at 0.75. Or you could argue something different, and you could say, well, what you want to look at is the 30 right? Not just the 21 here, but right, you want to add all of this up and say it's okay, it's 30, 17, 16, but you might say it that way. So anyways. Okay, so you might see it as 50-50, or you might see it as more likely, right? More likely we're here than here. Okay. Wow, that's great. That's so good, isn't that? Because here's the thing. When you're watching financial TV, when you're reading financial publishing, whether it's on the web or print or whatever, they debate these things. And I'm like, why do you care about, right? OPO, other people's opinions. You're like, well, I just look at the research. I just do the research myself. I don't care what other people think. So you're like, great. Well, you have all the information. Harvey wants to do the distribution, huh? Well, what you can see, there's no fat tails, right, Harvey? So there's no fat tails. So you come in, and it's a normal distribution, as you can also see, right? So we got a normal distribution, right? And no real fat tails. Okay. Oops. That's me trying to draw straight. Okay, so it's a normal distribution, thin tails. So, what it basically tells you is, 30-30. You might argue there's, right, if you do that, you could argue, well, there's a greater chance. So, I mean, here's the thing with stats, right? You can tweak it to fit your mold. So you could say, well, if there's a 28.5% chance of no hike, and then there's a 30% chance of hike, then 30 wins out. And you're like, well, that makes sense. But okay, but you can do it other ways too. Okay, so great. So either way, we're going to be somewhere between 0.5% and 0.75%. And you can make your opinion on which one you think it is. So again, one thing you could do is add these two together and then add these two together, right? So 47% chance. Okay. And you start to look at it like, yeah, it's essentially 50-50, but then now you can throw in your opinion. Okay. And your opinion would be how to interpret the actual data. What I don't like is when people just throw out nonsense. And very often it's just nonsense. Well, the Fed's going to do this and the Fed's going to do that and this is going to happen. Oh, if you look at China, like, dude, just give me some facts. Okay. So hopefully I teach you how to be smarter than most. Chris says, hey, because of all the news this week, is it best to sit this week out? No, not if this is your job, man. Your job is to look for opportunities and risk. And when you take opportunities, manage the risk. So you might want to say, well, there could be an increase in volatility, which is an increase of risk. So instead, find a way to manage risk and still be able to uncover the opportunities. Okay. So I would say if you're a professional, you still got to do your job, right? Your clients would be pissed if you took the week off and you went, I don't know, snowboarding. Yeah, it snowed in my mom's house. A foot of snow at least. I'm like, what? But yeah, so anyways, like take the week off. This is when you're supposed to be doing your job. It's sort of like a soldier training. And then when the enemy attacks, you're like, wow, man, look at the volatility. I think I'll take a week off. You're like, well, the volatility is them throwing grenades at you. Yeah. So anyways, this is more like recognize the risk as you are, and then think of strategies to mitigate risk, but still get your opportunities. So think of it this way: you're a professional basketball player. You're the best player on the team. You're a franchise player, right? And you get out onto the court, and they're double teaming you. So you can not play the game. You're like, well, that's it. Well, that's not fair. So I'm just going to not play. No. You got to work hard to open your opportunities. But if you don't have a clear shot, pass the ball. So your real job is to be at the right place, the right time, and do your job. And if you got to pass the ball, pass the ball. Okay. So one of the things I did last week, recognizing that there was some volatility that I didn't like, I cut my lot sizes. That was one way. I'm like, right? The way I explained it in the day trading group, it's like, I'm a trader. I want the opportunity. I want in the trade. It's not that I don't see the risk. There's definitely risk there, and I think there is volatility there. I understand it, but I need to be in the game. I need to take the shot. I need to in. I want in the trade, despite whatever risk is obvious. So now I got to find ways I can do that. One of the ways I can do that is a lower lot size. So if that higher volatility I recognize as risk goes against me, and by the way, it did several times. Well, now I got 1/3 the risk, or 1/2 the risk. I actually lowered a lot, so 1/3 of the risk. But I'm in winning trades too from that time. So that, once again, your job is to do your job. And so very rarely does your client call you up and say, oh, that's awesome. All that move in the market that I'm watching, you just did nothing with my money. That is so good. That's great. Thank you for doing nothing with my money while I'm reading in the papers and watching TV about crazy volatility, right? Stock market's up. Children are becoming billionaires, on cryptocurrency. And what did you do this week? Oh, I took it off. Right. So that's very rarely the right answer. Right. So more like do the job, but handle the risk. And we're really more than anything. Once you have a fundamental bias, an understanding of global macro flow of money, why money moves, when money moves. Okay. So now you combine that with your fundamental bias, how money is valued, the supply of money versus the flow of money. You get that? There's two concepts. The global supply of money, supply and demand, let's say, and the flow. There's the supply and demand of money, and then the flow of money around the world. Once you get a sense of that, then the rest is just technical analysis. Okay? Morning, Darko. But once you got that, once it's just technical analysis, then you have to is this a good opportunity? No. Is it a medium quality opportunity? Yes. Why? Well, there's some sort of risk here. I see green candles, but they're lower highs. Well, how do you want to mitigate that risk? Well, I could not trade. I could lower my lot size. I can wait for bigger pullbacks. I can wait for better setups. I could look for correlation. I can, but at least you're thinking about it. But the idea is you're not thinking about not getting in trades. You're thinking about how can I get in the good trades, but manage the risk. Okay. Okay. So anyways, there's our psyche speech of the day. We've done what? So I just gave you the psychological overview. Great. I gave you an overview of smart money negotiations, pricing, and interest rates in the future so that you don't have an opinion, but instead have factual, research. We went through the calendar. That's quite a bit for a morning. I'll keep going if you want me to, but I'd like to see some likes. Would you please click the thumbs up button? Okay, less than half of you have had the common courtesy to even click the like button. Come on. That's more than the average webinar, right? Yeah, Johnny, I saw that, right? Apparently you can be a good banker, but hanging out with naked children can get you in hot water with your shareholders. All right. Thank you, everybody. So what happened is a bunch of people click like and then a bunch of people quit. So apparently they have disdain for me to be so bold as to simply ask for a like. But anyways, to each his own. All right, so let's move on to .com. Looks like yen is trying, man. Looks like it's trying. Let's check out the buck. Whoa, what? Okay, lower low. Wowzer, huh? Lowest of the lows. Well, I don't like lower lows. We have this primed up as a bottom. Looks like it's working, but I don't really care yet. Right? Does anyone remember who buys bottoms? Besides Epstein. Huh? Broke traders. Be bats. Broke ass traders. Yeah. Yeah. So instead, I want to confirm this. Yeah, losers, right? Losers. So I need to confirm this, right? Right. I need to confirm this before I get in. By the way, look what happens when you buy high. Chasing the old euro, huh? Whoa! Now, I'll be honest with you. Up here, I thought, maybe I'll buy a dip or something. I didn't even think we'd get down to here. So, yeah, I thought maybe, down here, 16 and a half maybe or something. But the pullback doesn't surprise me, but holy crap. Holy crap. It's a fun one to watch because I'm like, it almost sucked me in too, but holy vey, come on, really? Dang. Okay. But so now what do I do? Buy that? No. Stop it. No. Okay. So anyways, you have this and then you got that and then you got this and then you got that. And that's where it's at, I think. Okay. Okay. But now you know. Okay. Might want to mark that out. That's where we're stuck on. So a lot of traders are going to say, well, what about this and what about that? This is a support area. This is a monthly M2. So a bull would do that. Okay. But I think if you do it now, You're throwing out technical analysis completely, which is fine. If you were George Soros, you wouldn't look at this and say, well, I see the monthly M2, but I'm worried about this role reversal. But George Soros would just buy it, right? Buy it at 116, buy it at 115, buy it at 114. Just dollar cost average it down because he wants to be long euro dollar for the next 5 years. That's how George Soros would do it. So if you're George Soros, then by all means. But if you're going to use a chart, then use the dang chart. It's a lower low. Take a walk, son. Pop a squat. Watch daddy work for a while. Okay? Cool. How about this? A lot different. Ooh, could be a rabbit, could be. So now we're in a range. Okay, but we're already trading it like a range. If you guys recall, I've gone over this multiple times. This is a range. This is a range. One of the things we're waiting for is a break of the range. And now I go ape crazy here. I'm a crazy psychopath up here. Okay, you could buy it here, 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 or you could buy it up there. You can't buy it here, you can't buy it here, can't buy it here, can't buy it here. You could try it there, you could try it, but dude, you're buying it right at resistance. Why don't you just wait? Because look at the difference here. You're like, I like it at 72. Or I like it at 72.15, even better. Well, if you're going for 333 pips, what's the difference between 72.0 and 72.1? Or 1.5 or 2. I mean, dude, statistically, there's no difference except you have massive risk on this one. Let me clear it out. Let me just delete this out. What's the difference? You buy it here, and you have massive risk. You buy it here, you have massive support. Thanks, James. I don't think I'm the best, but I might be in the top 5. Yeah, that's arrogant, which just makes me laugh. I'm not the best, no. I hope I'm a good coach, but I am not trying to tell you I'm the best trader or something. That is not what I'm trying to preach. What I am trying to preach is that if you understand, because what frustrated me in the very beginning, way back almost 20 years ago, I was very frustrated that I didn't understand. And I felt like there was a secret. Honestly, I remember thinking about it. And my vision was there was these rich, old, white men at the top of banks with smoking cigars, right? Gray-haired old white men, the top of banks, smoking cigars, laughing at everybody else, including me. And all these assholes had Harvard degrees. Fast forward a few years, I have gray hair, I smoke cigars, I have a Harvard degree, a couple of Harvard degrees, and I became the new asshole. Yes! Huh? If you can't beat them, outlive them. That's right. But the difference is it's no longer a secret. Okay? And this came from a revelation that I had, 17 years ago. I realize I need you in my life. So I don't know where you've been my whole life, but I need you in my life. I realized, so I had been a success before Forex, okay, in a couple of different occasions. And I remember a period, and this is the big famous now, business planning retreat I did with myself, because I I remember during the struggling period, I asked myself, well, why are things going wrong? And I realized I didn't have a plan. I'm like, I always plan. I always had teams. I've managed thousands of people, right? So there was always teams and teams for teams and managers of teams and teams of managers. And we always did things, right? So I'm like, oh my God, I need a business planning retreat for myself because I don't even have a business plan. Anyway, so I took it very, very, very seriously. I worked on it for days and weeks, in fact. And one of the things I realized at the end is I need like-minded people. I need to be surrounded by like-minded, driven entrepreneurs focused on Forex that will do whatever it takes to succeed. I need people with ridiculous, sickening work ethic that are willing to put in blood, sweat, and tears for years. And I said, well, how the hell am I going to find them? Because I don't know any Forex traders. I don't even know where to find a Forex trader. And I came up with this killer idea, right? This was even before YouTube. Before YouTube was even a company. There was software where you could share your screen. And it was for like things like tech support. And I'm like, I'll use this and I'll just show people what I'm doing. And I'll tell them everything I know. And maybe they'll stick around. Here we are. Okay? I'm teaching you things that took unbelievable amounts of time and effort. Unbelievable. I did things like study MACD for 6 months straight. Just MACD. I know a lot about MACD. I don't even put it on my chart anymore because I can see it. I can just calculate it. I can just do it. So cool, right? So thank you for being here because you keep me inspired. Like, I wasn't going to look at the Fed funds rate today. I already know it. But it's so fabulous to go through it, and because I'm sharing with you, but I'm retraining myself. I'm re-emphasizing what I know, but I'm double checking that I'm not missing something because it's what you don't know is what can really blindside you, right? So this is so good. For me, I hope this has been good for you, that we've learned a few things technically, fundamentally, psychologically, even just the idea that I try not to present my opinion. Instead, I try to present what I'm doing and how I got to my conclusion. But you could interpret it differently, and I'm perfectly okay with that. In fact, I hope you make your own decisions. That is my goal, that you become a successful, independent trader. And maybe if you're independent and successful, and I understand your way of thinking because you've learned to do the work the way I've done it, so now I understand you and you understand me, maybe we'll have an opportunity to work together. Maybe we can be teammates. Now, I want to be your boss, so we'll be teammates and everything will be great. I will be the boss and you won't be. It'll be a great partnership, right? But I think there is that opportunity. Can you imagine if there was 25 of us on a team and we're like a band of brothers and sisters where you know you can count on me and I know I can count on you, and our contemporaries on our team are the sharpest, most disciplined traders you know. That you're proud, but also you feel like you always have to have an A game to keep up with those brothers and sisters on your team. You're always striving not to be best, not to make the most money, but to be the most patient, most disciplined trader that you fit in with everybody else that are doing the same thing. I hope I am blessed with that opportunity to work with you one day. Smells like a small fund? Well, the thing with Forex is there's enough leverage where you don't need a lot of money. Okay? If you're a wealth manager, you're a peon with 100 million. Peon. Okay? You're not making good money. You're still driving your Hyundai to work, right? You have 10 million in Forex, you're making good money. Okay? You have 100 million in Forex. Okay? Right? Somebody's driving you to work. So, hey man, 100 million, tiny little fund. When you look at the CTA, so if you go to Barclays Hedge, they're one of the services that track the performance of CTAs. And they break them into two categories. CTAs, commodity trading advisors. So if you trade American client funds in Forex, you're a CTA. Okay? So a CTA in the United States is categorized in one of two places. Less than 100 million, more than 100 million. So let's say you only have 100 or 200 million. Dude, you're a baller. You got your own helicopter, yet alone your plane. You're like, no, I got a private jet card. I don't like the maintenance on owning my own jet, but I own my own helicopter. They're like, oh, okay, good. So whatever. So the thing with Forex, like whoever said it was a small fund. Yeah, dude, you got 25 million. No, it's not. It's going to take you years and track record. And you have to trade in a way to attract institutional money for that kind of stuff. So it's like, you can't be a street baller and then go to the NBA, right? There's like the college game versus the street game, right? There's a difference. And the college game preps you for the NBA game, but it's all basketball, right? There's difference. So you can't be a street baller and play in the NBA, that kind of game. So you have to learn. You might have the skills to be a street baller, but you got to learn to play, you're right, the adult game, if you will. And so there's things that institutional investors need. It's not even want, they need. And you have to learn that process too. But anyways, but here's the inspirational thing. You really don't need a lot of money to do very well as a foreign exchange trader. You don't need a lot of money. What you do need, though, is to grow your assets under management. One way is to have an account, trade it, do 1 or 2 or 3% a month for many years, 5, 6, 7, 8, 9 years, and never spend the money. Which means you have a side hustle. You married a wealthy person, you have a wealthy mommy or daddy, or you have a side gig, a job, you own something, I don't know, but you have to have a side gig because you can grow through compounding. So my book, one of the first things that it says is, the most powerful force in the universe is compound interest. Who said that? Albert Einstein. So if you're doing that, if you're just compounding and growing your account from 10 grand to $1 million, then that's one way of doing it. If you're like, well, dude, I want to be a full-time trader, I can't, right? And all that kind of stuff, then your side gig isn't your job or your rich, beautiful spouse, right? Because everyone rich is beautiful, right? Then you need to manage other people's money. Okay? You see that? And therefore, you trade their money, they pay you 20% of the profits you made on their behalf. That's really good. And maybe you can subsidize your living or live on that. Meanwhile, you're still growing your trading account. It's all about steady growth over long periods of time so that you have AUM, assets under management. Okay? And it doesn't matter. A wealthy person in general owns assets. You either own a business or you own stock of other businesses or you own bonds because you're loaning money to businesses, or you own real estate, but you own assets. And what happens if the economy collapses and your assets lose money? The government steps in to save you. Oh my goodness. Think about it. Quantitative easing ensures that rich people stay rich. So don't hate the game, be the player. Okay? Stop spending money and start earning or buying assets. Start investing into assets. And in this case, you're probably your greatest asset. So start a small account and grow it. Don't spend the money. Don't touch it. Just grow it for 5 or 10 years. And if you can do it for 2 or 3 years, then along the way, you can subsidize yourself by maybe managing other people's money. And now you're thinking differently, you're acting differently, and you're becoming a true professional. Notice that none of this is get rich quick. I'm talking 5, 10, 15-year periods. But I can tell you there's no greater way to make money. Okay? In my day trading group last week, I introduced a trader, professional trader, whose results look like this. January, February, March, April, May, June, July, August, September, and up to October. So this is this year. He was negative 0.25, negative 0.5, right? Positive 0.25, so on and so forth. I think did like 7.5 here, and then negative 1, and then there was another 7.5 in here. And October was actually a negative like 2. But it all added up. When you averaged it out, this guy was making about 2%, maybe 2.5%, whatever. But this is what I've been preaching for years. If you can just dumb everything down, stop trying to get rich quick, and focus on 2 to 3% per month. Just like this guy. Now, he's been working for about 20 years as a fund manager, was hired by BlackRock, I think it was about 8 years ago, to manage a fund, which he's doing, and he's earning 2 to 3% a month, but over 10-year periods. Over 10 years, his fund is up something like 400%. Now, that sounds good, right? But you and I know, well, that's over long periods of time. What we're talking about is just, can you earn 2 to 3%? Some of you guys are trying to make 20% a month. You're scaring off the big game. You're shooting at rabbits all day. So this guy makes 2 or 3% per month over long periods of time. How much money did he make last year? Ed Week says he went to MIT and took a job in engineering. However, now you just trade. But you know what, that MIT engineering degree, if you're out raising money, is very valuable. Okay. How much did this guy make? 90 million US dollars last year. Personally, boom. 90 million. And you know what? He's not the best. He's not bad. He's in the top 100 fund managers. I think it was 68. The thing is, he's good. He's all right. He's doing this job, right? Doing his job. Okay? At the end of the year, he's doing about 25% a year. Growing, doing his job. Goes to work, does his job. Goes to work, does his job. Goes to work, does his job. Every day, day after day, week after week, month after month, year after year. And then what gets reported is his fund is up 400% since inception. And that's really good and that attracts money. But the bottom line is what he's really doing is providing 2% per month to his clientele. That's all I've been pitching. That's my giant pitch I think you can do that. Absolute returns are not required. What you want is steady. And if you can do that, you can play the professional game one day. I don't know if you'll make 90 million. Okay, but can you live on 9 million? Can you live on 900K? I don't know what your numbers are. Okay, I don't know what your big target is, but I want you to look at it as a business. It might take you 10 years to produce, okay, 400%. And the only way you can do it in 1 year is taking on risk. And that is a killer. Okay? It's the mindset of, if you want to get rich quick, rob a bank. The problem is you have risk. You might get killed or go to jail for a long time. What's the difference? What is the difference? Because if you decide not to rob a bank, but instead go in with high leverage and get rich quick trading Forex, you are throwing away a business worth millions and millions of dollars, and you threw it away. You threw it away because you wanted it to happen quickly. No. This is a business. It's a service. It's never ending. You get up, you do your job every single day. What about, is there a quicker way? Is there tools? Can I cut corners? No. No one's going to pay you because you cut corners. They pay you because you're willing and able to do what they are unwilling or unable to do for themselves. So do it with a smile and say, I've done the research. I know what my opinion is, and I'm capable through patience and discipline to trade it and manage the risk. Watch me. Peace on earth. May the pips be with you. May your profits be above average. If you're in my live trading group, I will see you at 3 p.m. And then if you're in my live trading group, I will see you at 8 p.m. So we got the the U.S. close, and we got the Asia Open, and what an amazing week we have in front of us. Holy schnicker. So thank you for being on my team. Yes, as Morena says, yes, there's risk and reward in everything. Robbing a bank, you can get a lot of money quick, but there's associated risk with that. We're not even talking about the ethics of it. Okay? So anyways, I want to get rich quick too. I get it. So I'm hoping Elon Musk buys some Shiba coin and pops out a tweet. Come on, Elon. Pop out a Shiba tweet for me. And then boom. I'll take my 90 million and put it in my trading account. Turn that 90 million into 4 billion. Anyways, peace on earth. May the pips be with you. May your profits be above average. Cheers.